Hey traders, Jeff Yates coming back to you from Full Throttle Traders. I want to take a brief moment today and just kind of cover some plays that we took. Our one specific play that we took today, we definitely reduced share size. We've been in some unprecedented type market moves off of news. It's one thing to trade patterns and trends and, continuations and momentum. It's another thing by the drop of a tongue the market moves $3 to $5 literally in 1 to 3 seconds. It's difficult to trade. You don't know when that's going to come out. It's almost like being in a fun house and the market is absolutely just, you've got sliding doors and, glass mirrors and things like that. So I have one question for you. How's your trading doing? If you want to learn and look at what we did today, let me show you how we actually navigated the market today, waiting for the exact time to enter in momentum and end up with a 100% full win. So if you didn't have a good day today, a lot of traders are not right now across the board. Watch what happened in Full Throttle Traders and where we took our spread play. Okay, traders, so this is looking at the SPY here. Now you'll notice we didn't, knock the ball out of the park from a money perspective, but we did that intentionally. So instead of trading 4 contracts at the dollar marker at the credit spread, we chose to go further out of the money to protect us from these wild verbal swings that the market's putting us in, and then cut our contracts down, but also give them a little wider stops. Let me explain. So we banked $95 today here at the end of the day, made some money in the day trades this morning, but just specifically of one particular trade in the afternoon. And we try to trade a credit spread, several of these per day. And this has just happened to be at the 133 time frame. So number one, you want to look at the daily SPY. You can see I've been kind of tracking this SPY. This is when they announced the tariff news where the market just had this incredible day. And then it pulled back in about 70%, got back. And this is the critical part. When a wide range bar ignites, it leaves demand behind, but also leaves supply at the top. When it pulls back, that becomes a new supply area. What does that mean? It means there's a lot of people that own that stock here thinking that maybe a gap up was mounting and it gapped down. So they're bag holders. And so when it comes back up to here, when you think about the whole world in general, there is just a multitude of selling that will go on at these tops. And so you can see we approached the top here. We dangled with it. We gapped in. We went up. We gapped down, went back up. We've been dealing with it until today. Today we gapped up. A lot of this is due to the tech, which has been under pressure and selling off a little bit in that so-called sector rotation. Microsoft reported and blew it out of the park. Went from around 495, just pinned it around 420, and went to the high as 435 or 6 today as high before it closed. So that brought a lot of the broader markets up here. You start to see Microsoft, even some of the semiconductors as a result, because computer related and chips going into some of the computers is going to bring them up as well. So NVIDIA, SMCI, Supermicrochip, and things. So bottom line, the SPY was up here. So I had a hesitancy on being bullish today, and I let our traders know that, look, we can trade something here, but I would say very scalpy, and I would cut your risk back. And we've talked about that from as early as 9:30 in the morning when we were actually looking at the day trade side of things. If I were to do anything, I'd look to the short side. Now, that goes against the grain of a lot of people, but when you understand the true magnitude of support and resistance, supply and demand, and more importantly, fear and greed, when you have this type of market up, and I'll ask you this question, if you own the stock at 540 and it was gapping up here to 565, would you say, okay, I'm holding for a little bit more, or would you start trimming that position up? Well, because there's money and fear and greed and how we respond to money, there's a lot of trimming, a lot of taking profits going on. And that doesn't mean you don't go out and take out the high, because we did this morning. When you look at the 2-minute chart, you'll see that. And then we ran back down. So I was just waiting for the precise time to figure out where the best bear call credit spread would come in. I'll show you on the next page here. So again, wasn't, not setting the records on fire, but instead of just sitting there watching the market go by, we just stayed really, really, really far out of the money and just took a 50-cent entry on May 1, 56.75. So I think the highest the market got to was around 56.35 or 40. and that was at its peak. So we were coming in right about that time, just trying to get further out of the money. We waited a little bit longer today, which means the penalty of that is you have to get closer to the market. Unless the market goes higher, there's an opportunity to stay further back. But we waited for timing on that, and we were only going to be to the short side today, and that's because of what I just explained to you, fear and greed. If you don't understand that, it would be worth your while to come into Full Throttle Traders and check out, because this is part of the education that we do every day, every morning, on our gap analysis, looking for from day trades, and we move into stocks and options and spreads and a lot of other different style iron flies and whatnot. We start talking about what we're looking for, where our mindset is when we think about direction and on a particular day. One thing I will point out, I drew this box here probably the day it gapped down. I think that night I drew the box here, and I've kept this box here because I wanted to indicate where initial supply was. And as we came back up and we hit those over a 3-day period, eventually you can wear through supply. What happens is if you have your neighborhood you're in and there's 10 homes in the neighborhood and they're all waiting for price, and all of a sudden they start taking out that price and starts going higher, supply is eliminated. It can't exist if prices go higher. So what happens, the market meets supply, and that's what happens when we have the gap up and the close and the gap up. Market met supply. It basically drained supply and eliminate supply as it went higher. It's impossible for supply to exist in the short term with the prices being up, sustained higher than where the supply was originally, right? Think about that in terms of your homes. And when I go down to the second slide here, this is the one I want to focus on because this is where we actually got in. Now, in a day like today, I wanted to wait a little bit longer, and right in here was about 130-ish. And so I looked at this marker here, and this dotted line you can't see, but I marked this dotted line here around 50%. That's a Fibonacci retracement. So I was looking to get in somewhere between 50 and 61% of the fib lines. At 75%, which is this marker, when you start closing over 75%, you got to give that to the momentum side. So the prices could actually go back and take up the day. So in my mind, I'm thinking anything less than 75 has an opportunity to go sideways or lower. Well, you never know if you're going to enter in lower than it takes it up later. But generally speaking, we were holding our own. We were going sideways most of the afternoon in here in the doldrums and right up into the 1:30 hour. And so right in here, this is the low, this is the high. This is going into pre-market, the sell-off. But you see right in here, we took a credit spread. It was a 56.75 by 56.85. We keep them tight in here because we don't have to be that right. The wider you go on a credit spread, the more you're going to drop price fast because your option on the buy and sell are far apart. And if you're right on that direction quickly, you'll gain tremendous ground fast. But if you're wrong, you'll lose tremendous ground fast. So we've come to the conclusion that we're just been trading the 10 wides and the 5 wides, and it gives us a lot more flexibility in a room. So we try to time. Now, there's 2 ways to trade. Obviously, trade in the direction of the market, which I typically like to. But one of my strengths is trading where I think the market may have peaked or valleyed if it were short. And so today I actually looked at this as a peak. So right about in here, I came in the market on a 56.75 by 56.85, far out of the money at the time. It was around about 56.25. Bear call credit spread. And what that means is that we don't want the market to go all that much higher. And again, we want to run the clock out on this from 1:30 to 4. It's about 2.5 hours in time. As you can see, we basically went sideways in here, came down a little bit, got this side of VWAP, seemed to hold at the purple line, come back up here, purple line, VWAP held back up to near these highs in here, but it just was just more sideways price action until the end of the day, and then things began to tank in here. We didn't even need this. We were pretty much already at full profit most of this day. We never got over 50 cents, maybe 55, but that's about it. And you can see we capitalized fully on the profit. So the takeaways from this is that when you have strong moves and then a subsequent gap where it's had a tremendous run over time, you don't want to think about being long in a position. If you are, stay scalpy long, be more focused on range areas using credit spreads to actually short the market in general, so you can actually take advantage of the theta decay in a market that's overbought and people are beginning to take profits and trim their positions. So again, right in here, we were at full profit, and it was just, we were sitting here at 0.0. We didn't even take it out of nickel. We just took it, we let it go to 0. We saved the commissions and also got an extra nickel or dime out of the stock here. So again, today was just kind of just being in the market, very low risk. Typically our risk is probably 3 or 4 times that, but we're just wanting to kind of be there. But the market, we didn't want the market to get away from us. Yesterday, I saw $4 price moves in 1 second. Don't think I've ever seen that before, where it just zoomed, it was there. And option prices get ahead of themselves, start jumping over one another. It's hard to get filled, it's hard to get exited. So I wanted to kind of stay away from that in case it was going to do more of the same. And we're not out of the woods on that yet. But at least for now, keep your risk small, go out of the money further, and give it a little wider stop, but cut your share size down. So hopefully that helps. We'll see you in Full Throttle Trades. We do this every single day and educate people along the way. Hopefully we'll see you in the room sometime. Take care. Have a good afternoon.